Want me to introduce myself? Hello,
Uh,
everyone.
yeah, you can go ahead.
Okay, thanks, David. Uh, thanks, David. I am Mike Paulenoff. It is 4 p.m. Eastern Time. The market's just closed. Some of you will be thankful for that, given that it was a tough day. And hopefully we'll go over a few things that will shed some light on where we've been, where we're going, and my methodology of getting there. You know, if I'm supposed to discuss my favorite indicators, well, I'll get to that in a second. So what you see on the screen is my homepage. I'm the chief cook and bottle washer for mptrader.com. I've been doing this site for, this is my 23rd year of updating. So there's a lot of mileage in this site, a lot of chart work, a lot of psychobabble, uh, layered on top of the charts to try to determine what market psychology is, and a lot of economic data, anticipation of economic data, reaction to economic data, so forth and so on. And this is the site, mptrader.com. If you go to the room, where's the chat room, let me go to the beginning. I'll just give you a thumbnail of what the site looks like, what we do, what I do. Let's see what day that was. Yesterday. So this morning, I posted at around just after 8:30, and my opening commentary is usually trying to set the tone for the day as we enter the market. And today it was all about this article I saw early this morning. 5:30 a.m. is when it was posted. I saw it a little bit after that. The head of the New York Fed, or I should say the former head of the New York Fed, Bill Dudley, had a change of heart about interest rates. I thought that was pretty interesting, since he was in Powell's camp, higher for longer, and now he's flipped, and I call it sooner than later. And so, or I should say much sooner than later, is what I wrote this morning. And then, of course, there's Tesla and Google, and I went over that. And then I went over my big picture work and where we've been, and every day uh, I update these charts, and it is a rolling, continuous diary of my perceptions of markets. So this, for instance, is a 15-minute chart of the S&P mini the S&P 500 E-mini. And all week I've been following this sort of bottoming type of pattern. Yesterday it was struggling. We discussed the struggle with the breakout. Could have gone up from 55.20 or 56.20 to close to 5,700. But into yesterday's close, ahead of Tesla and Google, it gave back about 30 points and closed leaning on the 5,600 level. And that's when, we all discussed that on the site, and how tricky that is and disappointing, and that it looked like a bull trap. And sure enough, these were the downside targets I had put late yesterday at the close. If in fact this was a bull trap, failed recovery rally within the larger correction that has not ended yet, as we all know. But anyway, so we go over individual stocks, we have conversations, members, they ask questions, have conversations, make statements, and ask for updates on. So here's a member who asked for an update on FAZ. Here's another that asked for an update on Chipotle before tonight's earnings. And I guess we'll get to that in a few minutes, see how they ended up. But it looked like it was trying to, you click on it expands the chart that I do. And it looked like to me that it was trying to hold the 200-day. If earnings aren't perfect for Chipotle, then we're going down to these target boxes, target lows. And they're all designed from technical measurements, perceptions, from patterns, and so forth. Okay, so that's what I do, and that's what we do, and that's a thumbnail of my website, mptrader.com. Okay, so let's go over to the chart work, and I use TradeStation charts. I have for years, and let's go over to this page. All right, so if today's webinar is supposed to focus on quote unquote our favorite indicators, trying to determine a favorite indicator is like having 5 kids and picking a favorite. Just doesn't work like that. Your indicators, at least in my case, my indicators and disciplines that I use, they're many and numerous, and they pop out at me as I look at the picture. Like we're looking at Datadog right now, which comes out with earnings in a couple of weeks, I think. But one of my members asked me to look at it this morning, and so let's just say this. So you ready? Here are some or many of the indicators and disciplines that I employ, sometimes together, many times overlaid on each other. But here goes. Okay, so trend lines and channels, RSI, MACD, pattern recognition, cycles when helpful, wave counts when helpful, sector psychology overlays, Fibonacci measurements, moving averages, PC ratios, sentiment gauges, annotations of important events, time frames, i.e. 15-minute, 5-minute, 15-minute, 60-minute, 4-hour, daily, weekly, monthly, seasonals, etc., etc., etc. And you say to yourself, well, that's a lot of stuff. Well, I'm on my 4th decade of doing this, so I've had a chance to go through the trial and error period, which we're all still going through. And no matter, you could be doing this for 100 years and you're still going through trial and error, because the markets are never the same. They have, as everyone always mentions, they rhyme, but they're never quite the same. And they always throw you a curveball or a hook to get you to fake left before you go right, to try to get you out of the path to profits and riches. And I think one of the more meaningful anecdotes I was taught way back when is not everybody can make money in the market or in the stock in the same direction at the same time. Someone, or lots of people, for the most part, the majority is going to have to end up on the wrong side for you to be on the right side. So that, as a contrarian but very valuable piece of information, should always be kind of in the back of your mind. If you're in a crowded trade, chances are you're going to have to be either faster, smarter than anyone else, or you're going to end up, for instance, if you're long in a gap down situation, and after being in the position for a while, you probably end up with next to nothing because you overstayed your welcome. But that's another issue altogether. But what these indicators and disciplines that I mentioned, what they amount to for me in my career has been, they're trusted. I trust them because I understand how to use them for my purposes. Now, someone else may use them for other purposes and may not even think my purposes are valid, but my results or oriented approach suggests that when I employ them, they add confidence to where I think a market is going, or how I think a chart is developing. So for me, it's all about confidence. Everything I add, and what we're going to do now is like an Etch-a-Sketch in the old days. We're just going to start adding things onto this Datadog. So you see kind of my thought process and how I employ some of these indicators. And we'll start with a daily chart. But in the end, everything is designed to add confidence or make me less sure of what I think is going on. And I don't care what the outcome is, but in my mind, I have to come to a conclusion because it informs me how confident I should be about the direction and the magnitude of the move, or to stay away, or frankly, to be short if the evidence suggests so. So, okay, so Datadog, when I look at this Datadog chart, what I see a bull move from like 2019 to 2023. This would be, almost, I'm sorry, 2021, which is November. So here's the bull move. And, there's an uptrend here. Let me move this. Okay, so I'll make it thicker. Okay, so we have various uptrend patterns in Datadog, and this particular bull move was enormous. And basically, we're talking about the post-pandemic bull move. So we had roughly 28 to 28 to 200. So 200 divided by 28 is it only went up about 600%. Okay, so that's a pretty strong bull move. All right, so that bull move, however, has spent the last how many years giving it back. In fact, it gave it, that the 2023 into early 2023 into mid 2023, it had come down to $60 from 200. So, so that meant it gave almost 70% of the move back. So now what? Well, it looks like Datadog now is in another bull move, and this is defined as higher highs and higher lows, and that's what it's doing. Okay, so let's overlay some of these indicators that we're going to talk about today. First of all, I am a pattern recognition person. Now, if Malcolm Gladwell, in his book from I don't know how many years ago, Outliers, he could have interviewed me along with Michael Jordan, because Michael Jordan spent 10,000 hours, maybe 30,000 hours practicing his craft, and so have I. So I consider myself a pattern expert because I've been doing it for so long, and doesn't mean I'm right all the time. It just means that for the most part, I've seen a lot and I've experienced a lot in terms of patterns. And for someone who has either been in the business for a year, compared to someone who's been in the business over 35 years, I have an advantage just because I've seen more and I've, quote unquote, practiced my jump shot a lot more than you have, or someone who has been in the business for a year. And so when I look at this chart, this, from a pattern perspective, this pops right out at me that there's let me get rid of this, too thick here. Okay, so I see a rounded bottom. Now, this rounded bottom is an accumulation pattern to me. And at some point, that accumulation pattern is going to break out to the upside or fail miserably. We don't know which, but that's the art from the science involved in technical analysis. So let me draw a couple of other things here to make it more palatable. So here, by the way, that cash register, I guess somebody just left a comment on MP Trader, because they can do it whenever they want. Okay, so for those of you who are familiar with patterns, we can make the case that what we're seeing here is a bottom, a rounded bottom, and this isn't like a 10-minute chart. This goes from April of 2022 to, for all intent and purposes, April 2024. But what I see, if you want to put a familiar label on it, is a cup and a handle. Now, a cup and a handle is just another way of saying either you can make this a left shoulder, a head, and a right shoulder of an inverted head and shoulders pattern too. They're all bottom patterns. They're all denote accumulation. And so the plateau of resistance is pretty well defined. And in terms of Datadog, pretty much right at the moment, as long as this low retains its integrity, which it is 107.30, Datadog's handle after the cup is still intact, and it's attempting to break out of the handle. Now, this particular pattern argues that the distance of the first up move should be mimicked by the breakout from the handle, which in this case would be something along, hang on, it doesn't let me use the borders unless I ask permission. So there you go. So it's conceivable, or let's say we can anticipate based on this pattern that Datadog has potential to 180, if not higher. Now, based on this prior bullish action, it all depends on how this handle works out. Below 107 gets much trickier. All bets are off. So if you're an investor in Datadog and earnings come out and you find yourself below 107, this pattern now has morphed into something much less constructive. And that's what we know just from the pattern recognition. But it's not all about patterns. What about some of the indicators? Well, let's overlay a couple of studies on this. So let's do, here's my 100 and 200 day moving average overlay. Okay, so let's see what if that information added on makes us more or less confident that the cup and handle formation accumulation pattern is actually in good shape. 200 day is the red, and it's sloped up like 60 degrees, and that is a very bullish angle. Even if the price comes down to 112, it won't change the trajectory of the 200 day, which is an important aspect to whether or not you have confidence, or we have confidence, that Datadog is in a relatively bullish setup. Here's the 100 day, which is flattened out, but hasn't really rolled over. It's kind of flat to at a very, very modest downslope. So it's not creating much pressure yet. So let's just say that the 100 day, in my estimation, is neutral. The 200 day is bullish. Okay, so what other information can we overlay on this so that either helps or pushes the needle towards the bullish side of the ledger even more? Okay, so there are a couple of other moving average studies that I put on here. So let's do my shorter term MAs. Okay, so now what we have on here, and up top on the chart, you can see what we have on here. Here are the moving average. The three lines I just added are the 10, the 17, and the 50. Now, the 10 is a fast moving average, and that's here. And that's downslope now, which makes sense because the handle portion of Datadog, has rolled over into a down move within the handle itself. So the 10-day is down. The well, sorry, but the white moving average, I'll change to magenta. Okay, so this is the 17-day moving average, and the other magenta is the 50-day moving average. So here you have the 200, the 50, and the 100-day, and the two averages that are downsloping are the 17, which I use instead of the 20, and the 10-day. So for the most part, the major moving averages, the intermediate term moving averages, 50, 100, and 200-day, are not putting any pressure. They're not supporting the price structure yet anymore because of today's action. Datadog, being a tech name, got hit for 3.8%, which was right in line with most other tech stocks, other than say Tesla and the acutely hit ones. So tomorrow will be an important day for Datadog because it closed on the low for the most part, right below the 200-day. And if it continues down, it will be trading below all of my quote unquote trading and investing moving averages. The trading MAs would be the 10, the 17, and the investing ones were more or less the 50, 100, and 200-day. So tomorrow, if Datadog closes below the 200-day again, which is the second day in a row, that will reduce my confidence in whatever is going on. And then I have to look at it and say to myself, well, I'm losing some confidence in the ability of Datadog to break out, to thrust from the handle upwards at the moment. And then my expectation is, well, maybe Datadog has to come back down to 111, 109 for a test of the June lows. We'll have to see. Okay, so here's the Datadog pattern. We put MAs on it. We have, so let me get rid of just leave the handle there, and let's put a trend line, the major trend line, on top of this. Now we'll layer this on top, and we see that the trend line in Datadog, so we have the October, well, yeah, it's pretty much when everything bottomed, the late October, the October 2023 to June 2024 support line, which is critical. It comes through the price axis tomorrow at approximately 115, say 50. So that's the next spot to look at for Datadog. And if that breaks, then pretty much we can expect a test of the June lows in Datadog. All right, so now we've done trend lines, and in effect the handle becomes a channel. So from high, upward traverse, downward traverse, upward traverse, downward traverse of the handle is more or less a channel, and there are channels everywhere. We'll look at some other ones, and then there are other things we overlay on to create some confidence or lack thereof. Fibonacci's. So if I put a Fibonacci retracement band overlaid on this entire up move in Datadog, what does that tell us? Well, it's not a coincidence that the 38% of this entire up move, the 38% retracement, is at 109.22. Well, that's very close to this pullback, the original pullback in the handle. So that tells me that not only is it the low of the handle, it's also a Fibonacci support level. And if it breaks, it usually means you're going down towards the next Fibonacci level, which in this case would be a 10% move below this. So that tells me that this 109, 110 area is extremely important. So now you have the trend line telling you where to look for important support. Then you have the Fibonacci's and the prior lows telling you where to look for support. So that's another factor that tells me, well, right now I'm in the middle of nowhere in Datadog. I don't want to take a position here because it looks like it wants to go lower, especially after today's weak close. So I need more evidence that this handle formation is actually bullish. Right now it's neutral within a bull move. Um, so this is a daily chart, and time frame analysis is really important as well. So if I change this to, let me change it to a 4-hour chart, and we'll go backwards. So if I edit the symbol and I change it to minutes, and I put in 240 minutes, and I go to, let's say 360 days or a year. So this is now a 4-hour chart with my original hieroglyphics. So I'm going to remove the moving averages because now you're on a 4-hour basis. So to have a 200 period 200 period MA on a 4-hour chart doesn't really tell me anything. So let's just, we'll take out the Fibonacci and we'll expand the chart. And so here is the trend line that we looked at on the daily, which for obvious reasons should be where it's in the same place. Here's the handle. And now this is the chart from a okay, I guess my daughter's sending me messages. Anyway, so this is a much more granular candlestick view of Datadog than we saw on the daily chart. By granular, I mean now I can get into this up move and see what it looks like. And for those of you, who we spoke. So for those of you who are versed in some Fibonacci, some Elliott wave work. TradeStation is going to do its 30-second update in a few minutes. This looks like a Fibonacci move. I'm sorry. Let's start again. This up leg, looked at from a more granular perspective, looks like an Elliott wave 5-wave up or some variation thereof. If it is a 5-wave up, then this low should not be violated at and that low is exactly 107.30. So that gives us another reason to identify this low as a critical pivot low. And if this is an Elliott wave up move, then we can label this 1 of a new up leg, and this is 2, the pullback phase, and somewhere in here, certainly above there, it will turn up. So this is just added information, and I look at it and I say, well, does this give me more or less confidence that Datadog is probably going to be a buy in here, notwithstanding the prospect of a terrible or disappointing earnings report next week. All else being equal, I'm now a little more encouraged that Datadog will react positively to earnings as long as this low holds. Okay, so that's the 4-hour chart. So let's go to a 60-minute chart. And that's a 60-minute chart, but I have to add some. See if I can get more time in here. There you go. Okay, so here's the let's do 24 hours. Okay. So this is exactly where Datadog is trading as we speak. 118.50 off of today's low. At 117.30. So Datadog has bounced $1.20 while we've been talking. And it so far looks like it wants to hold this key level, 117. So what I haven't discussed yet are, all right, hang on, folks. Let me just get this done. So, uh, come on. All right, there you go. All right, I think we're back in business. That was a quick backup. All right, so what I haven't discussed are these indicators at the bottom of the page, which let me enlarge them. All right, so that's RSI, relative strength or momentum. And this is, this is MACD, which is a relative strength moving average measurement. And relative strength is also a momentum gauge in how fast prices are moving based on the nearest term entries versus the hours ago or minutes ago entry. So let's go back to the daily first, and let's look at these momentum indicators gauges from on a daily basis. Okay, so here's the Datadog daily chart. This is today, and the close at the low, 117.32. Here's the trend line. Now today, if this down here is relative strength, and that's what I use. Some people use rate of change. Everybody has their own comfort level with whatever momentum gauges. Some use proprietary gauges, and I found that in 20 years ago when I was on a trading desk and we had the gurus doing modeling, that it really didn't give us an edge for very long. So I started to use the canned versions of RSI, the formulas that come in the platforms, trading platforms, and it is not something I rely on, but it's very helpful since I am a pattern recognition first person. These indicators don't make decisions for me in and of themselves. Like for instance, Datadog, if it breaks 107.30 and takes this low out, which we've discussed as being an important one, these indicators will have to be screaming at me that this is a trap and that Datadog will turn up sharply for me not to consider this to be a major sell signal that will end up filling this gap down here that hasn't been filled yet. But that's another story, the gap filling expeditions of these markets. But anyway, so if we go back to RSI on the 18th of July, RSI hit a low of 37.32. Now that isn't even oversold in my book. Some people use 30 as oversold. I use 25 or below as oversold. For example, was it even oversold back in June when it hit this significant low? It wasn't oversold, but it was below 30, and it was 27.79, which wasn't even very oversold, but compared to where it came from, which was above 80, it had made a considerable adjustment, shall we say, in momentum. Now what we have here is yesterday's low in momentum was 37.32, and that wasn't yesterday. That was the 18th of the month. and the 18th of month was last Thursday, and today it was 37.93. So what does that tell us, if anything? 37.32 last Thursday's low at 117.86. Today we're at 117.24, a lower low, but the momentum close was 37.93 or higher than it was last Thursday. So I'm not going to jump up and down yet about that, but if everything I'm looking at is telling me that Datadog is pulling back or buying time before it takes off, then this is a very good sign, and it doesn't do anything to reduce my confidence in the cumulative work that we've done so far. Now, if it made a new low, if it was at new lows down here in momentum, 34, let's say 34.80, I would say it closed on the low, made a new low in momentum, and that is a confirmation when price and momentum agree. There's no divergence. Today there was a slight divergence, but it's notable because I'm looking for clues when this down move in Datadog will be exhausted. And that's just one more clue that it's getting there, but not there yet. But I'm on my toes looking for it. Now, MACD, of course, gave a sell signal, or I should say, gave a warning signal for the long side back here, which was up here. And the reason why I changed my phrasing from sell signal to warning signal for the longs is because MACD is still above zero, and both of them are above zero, both lines, and until they both travel below zero, I don't consider it a sell signal in the pure sense. I consider it an anti or a counter trend signal near term. That is to say, it's warning us that the longs are out of gas and that there's reason to believe there's some selling pressure to come or in progress, and that's the case. All right, so that was the daily. So if we go back to the hourly and look at RSI, what do we see? Now remember, the daily was telling us that that it was in the same vicinity as the 18th of the month, and looking like there could be more selling pressure, but starting to diverge in a positive way. Now, the hourly is showing us more of the same. That is to say that compared to the 19th of the month, which the daily was as of the 18th of the month because of the closing basis on the dailies. The hourly, this is an aftermarket print, which I include in all my charts. So this was a 5 o'clock reading, 5 o'clock p.m. reading on the 18th of the month after the close, which is considered the next day's trading statistics. But anyway, so this was the low of the move, 117.30, considered to be the 19th. And here is the RSI level, which is 20.58. Today, we broke, what did I say this was? 1730. Today, we had 1724 with an RSI that was above, it was 2491. It was above where it was back here. So we're starting to see signs of downside exhaustion in Datadog, of this entire move, number one, of this move, this leg in and of itself, number two, which gives me a little bit more confidence that the end of this correction might be near. All right. So that's so when you use different time frames, here's a 15-minute chart. which gives you a more granular view of the pattern itself and when you think the legs might be finished and how the divergence is set up. So the low of this move today was at 12 o'clock noon. RSI hit a low. That was a pretty oversold low at noon. It was 13.20. And at the end of the day, it the price was lower, but RSI was higher. RSI hit 2416, 24.16 versus whatever I said it was, 13 something, 1320. So on an intraday basis, on a 15-minute pattern, Datadog looks like it's going to bounce, and the first print after market so far is a bounce. Question is it the bottom? We don't have that information yet. Let me just see. Let me just go over to my other screen here and see when Datadog comes out with earnings. DDOG. Okay, so Datadog earnings are on the 8th of August. So we have 2 weeks. So that's an eternity for Datadog. But in the interim, Datadog will work out on the daily chart. It's either going to make or break this handle, and the larger chart, which goes back 2 years, we'll do 10 years, even though the company's not 10 years old. This pattern is going to make or break, certainly before earnings come out. Now, if Datadog turns up ahead of earnings, then earnings become another indicator based on the chart work. So to me, this is a potentially explosively bullish pattern, as we discussed at the outset. And if that's the case, then the likelihood that earnings will perpetuate the bull move is greater than otherwise. Of course, there are surprises, but for the most part, in my career, most of the time, I would say 60, 65% of the time, that these setups ahead of earnings provide a directional edge or a directional hint about the response of investors to the earnings call. Even sometimes, a lot of times, earnings are mixed, but the stock takes off, and and you look at the chart and you understand why it took off, but you look at the earnings themselves and the conference call, and you wonder what the heck happened. And I don't think there are any coincidences. So for me, a lot of it has to do with the chart. Now, here's a chart of Google, which came out with earnings last night, and it was a mixed bag, and the market was pretty much in a bad mood and focused on YouTube revenues, or lack of enough revenues to satisfy everyone. And last night, this is the way I left it with MP Trader members, that I thought best case that this was a sell the news correction in progress that had potential into the 165, 170 area. And this is on the site yesterday afternoon before earnings came out. I don't have a crystal ball, but all the chart reading and the experience that I've accumulated led me to believe that the highest probability was a failed rally if they liked earnings, maybe to 190 max, followed by another down leg that extends the down the correction that was in progress already off of the July all-time high at 193.31. So far that looks like a pretty good call. We got down to 173 and change, and whether or not we're going to get to the 170, 165 area remains to be seen, but that's my job intraday, to watch Google to see how the intraday patterns are forming, so I know whether or not this, whatever happens after this down move today, this big gap down that ended up down almost 5%, is a bear flag that looks like it's going to tip over, or we have reason to believe that Google's hit a major low. The fact that Google's momentum on a daily basis hit a new low, and it's not even oversold yet, confirming today's price weakness, suggests strongly that Google could very well be at 170 very soon. Well, it's 174.37 at the close today, so it's not a very big move. The question is it going to 165, where I would start to look at it, looking for downside exhaustion. So it's another example. You see all the annotations on this chart, and I put where I think corrections end, major corrections end, where up legs end, and then I put in the rounded bottom demarcation, so it reminds me what I was thinking. Sometimes I have to get rid of them because it prejudices me too much, but until there's the until the price action it tells me to remove my prior thought process, or to modify it, or to morph it into something else, I keep it there to show me what I'm thinking and the basis for my pattern expectation. Here's NVIDIA. So way back here in mid-July, because this pattern looked like it was counter trend after this down move, I pretty much concluded that we were going into here somewhere. I didn't know how it was going to happen, when it was going to happen, how fast it would happen, but here we are. And it looks to me like we're coming into a major, major, major low, corrective low, down, up, down in NVIDIA soon. And I would think that I would be surprised if we got to 105, but somewhere around 110, 112, I'm thinking that NVIDIA will be exhausted. The question is, here's it, next earnings, August 21st. That's going to be on everyone's calendar because it's I mean, NVIDIA has been the market to the extent that it still is the market, and to the extent it can still provide another quarterly, shocker, which it seems to do every quarter. One of these quarters, it's going to be a phenomenal report, but it won't be a shocker. And what will the stock and investors do then? That that it sell off because they're disappointed, or will they say it's still amazing, but instead of growing at who knows what, 80%, it's going to grow at 30%, which any other company in the universe would take as a consolation prize. Anyway, so it's all about patterns. And if if NVIDIA gets down here and it can't get back above this area, then I'll start drawing these things, right? And it'll start looking like to me as though Google, I'm sorry, I keep saying Google, that NVIDIA, in fact, is carving out a top, and it's no longer, if it struggles and it's messing around in the 110 to 115 area into the August 21st earnings, that's going to be one treacherous time, because any disappointment could mean that NVIDIA is doing this to fulfill the downside potential of all this stock, all this overhead. Now, if you flip this over, this becomes a base, but it's not a base, it's a top. And the only way for NVIDIA to avoid putting in a pretty significant top is to tell us that it's not a top, and that will be a powerful rally that takes out, some trend lines, that gives us confidence that if you didn't buy in this 110 to 115 area, that you're not going to get another chance for another several months. But we don't know that yet. Right now, NVIDIA has to prove itself, believe it or not. I don't know. I didn't think I'd ever be saying that NVIDIA would have to prove itself, but technically it doesn't look all that healthy. And it needs to show us through an upside reversal or some sort of technical signal that it's exhausted on the downside. And I mean, when you think about it, this chart is telling us that, let's see, what was this high? Was that yesterday? It was yesterday. It was at 124.69, and today's low was 113.44. 44. And what did I say this was? 124.69. So from yesterday morning, I mean, it's down 9% in a day, or, a day and a half. So if nothing else, it's getting oversold, and it is oversold. Its RSI is at 20, which to me is oversold. So that's a look at and then at NVIDIA. And then there's something like this weekly crude, right? What is that telling us? Well, I mean, this chart goes back to 2004, 2005. It looks to me is that we can make the case that this is some sort of pennant flag, but is it a bull flag or a bear flag? We don't know yet. Some people will tell you that since the high in 2022, this down move has gone into a sideways funk, and the next move is down here. And we'll have to see how this pattern resolves itself. For now, crude oil is in limbo, but this is a very big picture chart, and everything about it, weekly RSI, weekly momentum, and weekly MACD, they're all telling us the same thing. Crude oil is in a tug of war. Let's just call it between, say, 70 and 85. And right now, I guess, as the presidential sweepstakes continues, this chart will move in one direction or the other. If Trump is ahead, it's drill baby drill, and I suspect that excess supply and the prospect that the economy could be weakening will take us down here. On the other hand, if Harris or whoever the Democratic candidate turns out to be, right now it looks like Harris is trying to restrict output in oil, and the economy grows at 1% and doesn't go into a major recession, then there's probably going to be a supply deficit, and crude oil will start to discount that and break to the upside. And of course, there's geopolitics, which we can't discount altogether. But so far, even after the the Israel-Gaza breakout, crude oil hasn't been affected much at all. So anyway, let's see, what else can I show you? This is a short-term chart of Meta. Now Meta hit an all-time high on July 8th at 544.33. It doesn't look done on the downside yet, and I think Meta's it's struggling, and it comes out with earnings, I think, August 2nd, maybe, I think. Let me see. In any case, what we do at MP Trader is people ask me for charts. I put up the charts, and with all these annotations and my perceptions from the indicators, the patterns et al. And then we discuss them, and then as they unfold, we discuss what to do next. The fun part about it, hang on here. Uh, I hope you're seeing this, but the fun part about it is when people come back and we have a running dialogue. Like this particular member has been looking for a rollover in the financial sector. So he asked me to look at the leveraged, 3-time leveraged inverse, which means that the financials, as they go up, this goes down. And are we coming in for a major low? And it's not quite there yet. So we've discussed this several times in this down leg. And although it's hit my target at around $9 and taken that out, I don't see signs yet that it's ready to reverse. So above here, yes. Until then, I think there's lower lows. So if that's the case and the financials are not ready to roll over, it's unlikely that the market tanks. The overall market, the S&P, so to speak, tanks without participation of the financials. So anyway, I hope that this was informative. I mean, my next webinar with David, maybe we'll do question answer. I didn't think that was the format today, so I just kept speaking, and I hope that it was okay. Anyway, David, I appreciate you inviting me, and please do again.